So this is the most often used predictor of are we going into a recession or not. And what you see here, this is the 10-year Treasury minus the 2-year Treasury yield. So whenever it goes below that zero line, Treasury bonds, and the 10-year is, I believe that one's a bond, and the 2-year is there's bonds, notes, and bills. The 2-year is a note, I believe. Short term, like a 3-month or a 1-month Treasury, is a bill. The medium terms are notes, and the long ones are called bonds. But this is the 10 minus the 2, and whenever investors are demanding more yield for loaning their currency to the government for a short period of time, 3 years, 2 years, 3 months, then they are willing to receive for loaning it for 10 years, 20 years, 30 years. That's an inversion. So when it goes below that line, the investors think that there's something wrong with the economy, and they're demanding a higher return for these short-term loans to the government, because that's what these bonds are, is a loan to the government from investors. And so you'll notice those gray bars, the vertical bars, are the recessions. And it goes inverted before the recession, and then after 1990 here, it uninverts or reverts somewhere between 3 months to a year before the recession starts. And here we have the longest inversion in history. It's longer than this one, and it's a deep inversion, and all of the yields, it doesn't matter which one this is the 10 minus the 2, but you can take the Fed funds rate, 10 minus the Fed funds rate, or the 3-month minus the Fed funds rate. Any one of the yield spreads, they were all inverted, and it has uninverted. We are overdue for a recession. By the way, I want to thank Jason for that long introduction he gave about the doom and gloomers, because here I am. I'm actually not a doom and gloomer. I'm going to present a bunch of data that says that to me says there's blood in the streets coming very soon. And so you might perceive this as doom and gloomer. In 2006 and 7, when I was appearing with Robert Kiyosaki, I was presenting all of this data, and man, this feels like 2007, just before the crash in 2008. So I was perceived as a doom and gloomer. What I was pointing out was that there was tremendous opportunity. What happened right after that is real estate and the general economy crashed. And no, it won't be as bad for real estate this time around, because we don't have the same mess with collateralized debt obligations and mortgage-backed securities that we had back then. But I do believe that there is tremendous opportunity coming. And from 2007 until 2011, gold tripled and real estate went down by half. If you were able to sell a home in 2008 or 2007 and buy gold, you could buy 6 homes just 2 years later. That's, if somebody says, well, I bought a house way back when, and it's doubled or tripled in value. No, it's doubled or tripled in price. If it was tripled in value, you would be able to sell that home and buy 3 just like it. But the other homes went up the same amount. I'm somebody that I came up with something called wealth cycles years ago. And it's basically switching asset classes. I saw the Dow-gold ratio, and then in my mind, I saw it inverted, which would be the gold-Dow ratio. And nothing goes up. Nothing in society goes up. Everything is trapped in a valuation range, and there's something else where the public is rushing toward this investment or that investment. And so there's something overvalued, and there's something undervalued. I have a book that I will come out with sometime or another, but I did years of research on this, and I've got data going back to like 1870 or 1880 on Dow gold, the real estate, oil, and comparing all of these different things against each other. And going back that far, they've been in balance like 20 times over that period of years. And then they go way out of whack. And we are in one of those way out of whack places right now, especially in the stock market. So in 2008, we saw, in the year 2000, in 2008, we saw a tremendous stock market crash, a recession. In 2008, it was real estate that was in a bubble. In 2000, it was the NASDAQ and all of the tech stocks. But it takes the entire economy with it. I think we're going to have a very bad recession. It'll probably start this year. It certainly does feel like it, and all of the data that you're going to see here.